Here we have 4 amazing guests to share their stories about the capital market with us. So we have Christina Bao, who's Deputy Head of the Hong Kong Exchange, Deputy Head of Market Development and Head of Issuer Services. Brian Gu, Vice Chairman and President of Xpeng Motors. Delano Musafer, Head of APAC for New York Stock Exchange, and Esther Wong, Managing Director of SenseTime. So, you know, I know that NYSE has 70 public companies, right? Chinese public companies, and Hong Kong Exchange has had over 100 listings from China this year, which sounds amazing. But everyone is talking about, is it the winter of you know, tech IPOs and winter of IPOs? So what is it like? Can you guys all talk a little bit about your thoughts about what temperature it is at the moment, and also about your companies for the other two? Yeah, can we start with Christina?
Okay, thank you. And you know, very happy to be here. And so far, I haven't felt the cold from winter. Actually, this year has been a very you know, tremendous year for HKEX, because this year in April we introduced the new listing rules, the new listing regime. Therefore, we would allow WVR companies and also secondary listings to come over to Hong Kong, as well as biotech companies pre-revenue to also list in Hong Kong. And with this momentum, we've been seeing so many Chinese tech companies interested to come to list in Hong Kong, and therefore this year we've already reached over 120 billion Hong Kong dollars for tech companies only. And in addition, we also successfully attracted 2 major WVR companies, one is Meituan and one is Xiaomi, and also for 4 biotech companies, including Beijing. And the most recent one is Innovent, which has done, you know, very, very well in the secondary market. So, you know, we haven't really seen this winter, but I understand why people are talking about this winter a lot, partly because of you know, the more tight you know, funding in the primary market, and also you know, the liquidity issue in the secondary market, as well as the volatility. But you know, in our view, that this IPO process is just one channel for fundraising for these potential issuers, and we very much hope that we can lay the groundwork in a very fair and transparent manner, so we can be you know, in the right position to service these you know, potential issuers in the near coming future. And just for the record, you know, we still have a very strong pipeline, and we're very happy to be able to embrace a very successful 2019.
Okay, sounds like it's still summer at the Hong Kong Stock Exchange. Okay.
Well, maybe I'll just give a little bit color on Xpeng Motor first before diving into your question. So Xpeng Motor is a 4.5-year-old electric vehicle company in China. We built a smart, intelligent electric vehicle for the middle market with autonomous driving features that we developed ourselves. I joined the company early this year. Before that, I was actually a banker at JP Morgan, and also have done a lot of the IPOs. You know, Innovent actually was the client I brought to Hong Kong Stock Exchange, actually.
Thank you for that.
But I think the question is interesting because Xpeng obviously right now is a private company. So we're looking both at the private equity market as well as the public market. I think the question of whether there's a winter, I think it depends on who you ask, because I still see there's a lot of liquidity in terms of the total amount of dollars being raised by the funds, both in private equity and in hedge fund, or even, you know, for that matter, some secondary funds. However, these investment has been more selective. People has been taking a long time to process some of the investments, and I think that will lead to a feeling that there's a little bit chilling happening in the market. However, I think if you look at some of the recent examples of recent fundraising, including you know, we raised about $900 million this year. I think SenseTime, you know, also raised successfully this year. I think that the top tier companies still, I think, having a very relatively good access to capital. I think this market will separate, I think, the leaders from the rest of the pack, and that's what you're seeing. I think the headline effect is happening. In terms of the public market, I think you know, there's a lot of volatility we are witnessing, but I think also China is introducing 科创板. I think Hong Kong is actually, you know, introducing more regimes to encourage early stage technology companies. So I think there are developments that we see are positive for company like ourselves. So generally, I think the question of the winter depends on who you ask. But I think generally we feel pretty confident and comfortable at the moment.
Still summer for you guys too, it sounds like. Delano.
I generally agree with everything that Brian just said. In the IPO market, I'm actually of the view that winter has come to some extent. We've seen a lot of tech deals have been either downsized or just outright postponed over the last 2-3 weeks. So while the private market for raising capital is absolutely buoyant, as Brian said, liquidity is out there. Companies are generally preferring to stay private for a bit longer. They don't need to IPO to raise capital. Okay, you can just go to the private markets and do it that way. So while there is this volatility in the markets, the pipeline is massive, but issuers are taking the view of maybe wait and see, or if they simply don't want to see, might try and squeeze in a couple of deals before the end of the year. But so there's a bit of a dislocation between the IPO market and the private market in terms of capital raising. So the pipeline is massive. I doubt we'll see that many more deals before the end of the year. There are a couple of very high-profile deals coming to market. Tencent Music is an obvious example. So I think a lot of issuers are going to wait and see how they do.
And Tencent Music's doing New York Stock Exchange, right?
Yeah, listed in the US. I'm not going to comment anymore.
Oh, okay.
Okay, so my name is Esther. I'm from SenseTime Technology. First of all, I would also like to explain or to introduce a little bit about SenseTime. How many of you have heard of SenseTime? Raise your hand. So 15% of you. How many of you have used 美图秀秀 on your phone? Slightly more. How many of you have 头条 on your phone? Or 抖音? Okay, so a good chunk of you are actually using our customers' products. So we are the largest AI platform company in China. We actually have the world's third largest AI research team. Okay, so the largest one is Google. The second largest one is Amazon. The third largest is actually SenseTime. So we are a Hong Kong company that is started with a Chinese university in Hong Kong, and right now we have 3,000 people, and we actually serve around 18 verticals. So the clients that I just mentioned, such as Meitu, such as Toutiao, they are one of our verticals that we service. So going back to your subject, Anna, do we see a winter? Yes, I agree with my fellow panelists. In fact, there is, despite the overall fundraising environment is not very favorable these days, but money is actually going very bifurcated, i.e. the good companies, the good private ones or even public ones, we're still seeing a very good chunk of flow coming into us. So as Brian just alluded, we actually had a successful fundraising rounds, a few rounds this year. The last round that was publicly announced was done back in August, and we actually have a few rounds afterwards as well. So money has been going into sectors that investors still prefer.
So this is really interesting because you guys are so successful, but let me just say as an early stage investor that we have plenty of companies who are getting term sheets dropped, who are lower valuations. It can be winter in other parts, but just not on this stage. So when Delano, you and Christina, when you guys are pitching companies, some of them obviously they have tremendous fundraising capability. So these two kind of can stay private for a little bit longer. But what's your pitch to them? So for how do you should go public and where you should go public versus staying private.
Okay, for the NYSE, I think it splits into two bits, is why the US makes sense, first of all, and then why us rather than NASDAQ. So for tackling the US bit first, the US basically is a tried and tested home for tech. US-based investors in particular understand the story, they understand the business model, they're very sophisticated, they get it, and if they like your story, they're willing to pay a premium valuation. That's really important. In addition to that, the dual class share thing, we've had that forever, basically. It also applies to institutions, not just on individuals, unlike Hong Kong at the moment. Liquidity is a huge factor. The pool of liquidity in the US is unmatched. On average, the NYSE trades about $150 billion a day. That's far more than any other exchange in the world. The access to institutional investors who are specialists in tech, though, is probably the key selling point over and above other jurisdictions. A lot of the big generalist investors like your Fidelities or Capitals, they don't really care where you're listed. They're global funds, there's global money out there. So they can list in Hong Kong, they can list in the US, they can list wherever. But there are certain smaller funds which basically it's in their investment mandates that they cannot buy non-US listed securities. The key point here is a lot of these are sector specialists, they're price leaders, and therefore, you know, all other things being equal, they're really important to get in your shareholder register. Mm-hmm. So that's a general case for the US, and then it's us versus NASDAQ. Comes down to two things, basically. There's a profile and prestige argument. Everyone's seen Jack Ma ringing the bell when Alibaba went public. That's a hugely inspirational thing. It's a key draw. We've actually lost deals where we couldn't guarantee the bell because it was taken by someone else. And so it's gone to NASDAQ, which is really frustrating, but nothing we could do about it. And then there's our market model as well. We're a bit different from NASDAQ. We have guys in the trading floor in addition to the computers and pricing algorithms setting prices. So it sounds a bit archaic, but it works. The net effect of these guys is they reduce volatility compared to NASDAQ, and the spreads are tighter. So it's on average 30 to 50% less volatility than on NASDAQ, and that's a huge draw from an issuer's point of view. So the US makes sense for tech, and then us versus NASDAQ.
But what about versus staying private? Like if SenseTime and they're raising billions.
Sure.
Right.
So as I mentioned before, you don't need to IPO to raise capital anymore. It's a huge sea change from, say, 3 to 5 years ago. It's typically driven more by the investor exit angle. You know, they want liquidity, and they simply want to cash in and satisfy their LPs.
Anything to add to that?
Yeah, I think it's you know, we've been talking with a number of Chinese unicorns, especially tech companies, and I find it's really interesting because this year we have run into so many situations where, you know, people are telling us that they have grown into a stage where they think going public makes sense. For example, if they have hit a certain milestone, like, you know, their product is now available in the market, and they are also sort of trying to expand their network, or they need to sort of expand their customer base. Therefore, is naturally, as a faster growing company, you definitely need more flexible funding sources. And a lot of these companies are considering coming to, for example, either to Hong Kong or China or the US for listing to expand their fundraising channels. I think that's very important. On the other hand, we've been also talking with a lot of the investment companies, like PEs and especially PEs, and their view is that, you know, eventually they have to make a return to their investors, and therefore an exit strategy is very important and critical for them. You know, how to consider that and how to sort of time the exit strategy is also critical, and they have been, you know, having discussions with their you know, investees. And in terms of you know, why you know, coming to Hong Kong or consider Hong Kong for listing, I think is pretty obvious for a lot of you know, to-be issuers especially. I think for a lot of the Chinese companies, the culture sort of consistency is very, very important, and also as you know, Esther just asked the question, like, who have used all these apps, right? So here in China, you have both the client base as well as the investors base. So therefore, people are familiar with the business model, and therefore, it's easier to communicate to the investors. And we were just having this conversation with one issuer who told us that what's most important for him to go public is to whether or not he can find the right investors. They can sort of agree on the key principles. So these are sort of ideology, you know, consistencies are really, really important for these people as well. And the other thing is really about the investor base, because in Hong Kong, you not only have a lot of these international investors, but you also have you know, local Hong Kong investors, and more importantly, the Chinese investors are coming to Hong Kong in the secondary market through StockConnect. And right now, the StockConnect contributes like around 7 to 9% of our daily turnover, and that number is growing. So therefore, a lot of companies are really looking forward to have more, you know, domestic investors to have access to these you know, really strong performing companies going forward. And it's mostly that. But in addition, I think very important is you know, consistently is that we have you know, a very strong and very easy way for people to do follow-on fundraisings in Hong Kong market. And you know, therefore, I think a lot of these companies are not considering just like this is a sprint. It is more like a marathon. It's, you know, how consistently you can just keep raising funds at a reasonable price.
Mm-hmm. And to turn it back on the companies, I mean, you guys have both only been around for, what, 4 years?
4 years.
Both of you guys, right? Very short amount of time. So how are you thinking about your timeline? Do you have any pressure from investors to be exiting or thinking about that? And you're already at a size, both of you are quite sizable, so you could have a number of private and public market options. So what are the conversations internally about that?
Yeah, thanks, Anna, for the question. So we actually don't have a fixed IPO planned, but obviously there's a lot of benefit of being a public company. So as we just previously discussed, right, the secondary market, the type of investor is very diverse. There's a lot of money in secondary market. So you have a more diversified profile of investors. Obviously, when you're a listed company, it also helps you to lower your funding costs because when you borrow from bank, it's easier. You raise your reputation so that maybe it's easier for you to do business as well. And obviously, internally, it will give investors and it will give your employees an incentive plan. So there's a lot of benefit of being a listed company. But that being said, though, and this doesn't just apply to SenseTime, I think it applies to a lot of startups, especially in tech space, is that I got asked one question a lot. And say, what is the biggest challenge that you're facing right now? Because business seems to be going so well. Well, the biggest challenge, what the management is facing right now, honestly, is how do we spend our time? So we grow, it's a 4-year-old company. We have been growing at around 400% top line for the last 4 years. Obviously, now we have a bigger base. We can't grow at 400% forever, but it's still a very healthy triple-digit growth for the next few years, foreseeable futures. So we have so much business opportunities that we don't know what is the best way to really have the highest return on the ROE of the management's time. So being a listed company, you have to be dealing with investors, secondary market investors, and you have to deal with quarterly reports, biannual report, annual reports. And before I joined SenseTime, I was actually a banker for 20 years. So I've done a lot of IPOs for other corporations, and in my experience, there are some CEOs that cares about share price every day. They will look at it every day. There are some that say, okay, as long as the trend is okay, it's fine. But none would say, I don't care about share price. So what happens is once you become listed, there will be an element of you looking at a very short-term focus. Okay, what is the share price going to be today or tomorrow or after my earning result announcement? So these kind of pressure as a private company you don't have. You can think about more big picture things. You can think about more how do you build a business model in a more sustainable manner, for instance. So I think there's always a fine balance on whether you want to be listed or not listed. And in our case, we are very lucky. We don't have pressure from investors to chase us to be a listed company. And so we are still fine-tuning what is the best. We're always balancing the interest of our existing investors and also for the management and also for any future investors to be part of our company. When is the good time balance? So this is something that constantly on our mind, but we don't have a fixed plan yet.
Okay.
Yeah, I'm not going to probably add too much because I think it's very well said about the decisions a company would look at. I'll just add a couple points. In terms of being a public company, I think the benefits to us is it becomes a company that you can have regular access to market. The liquidity, I think, is very important for both the new financing as well as the exit for shareholders. And also, I think bringing the profile of listed company is actually good for business and building brands internationally and domestically. So those are the benefits that we look for. So that's why we obviously always keenly, monitoring the IPO sort of sentiment. But on the other hand, I think on top of what Esther mentioned about the balance between where you want to spend your resources and time, also I think you need to really understand whether the company is ready to be a public company. Because I think being a public company carries a lot of additional scrutiny, a lot of responsibilities. Do you have the predictability of the financials and the business stability that you can actually give right guidance to the public market who actually is looking for more transparency and more information. So I think once you have decided that you actually can hit all these sort of points, and I think it's more natural for you to contemplate an IPO exercise. Before that, I think it will be quite difficult to maintain a strong sort of public company image. So that's something also we are trying to make sure that we prepare ourselves for. Not only watching the market sentiment, but also making sure that we are developing our internal systems, internal financial, building our business to have a, reach a sustainable and also stability that we can actually tell the street. I think that's, before we have that confidence, I think we want to, probably stay private a little longer. So I think there's a trade-off, but I think the benefits definitely is there, and we're very actively watching it.
If I can add just one little point going on from that is, we do advise companies to be of a general critical mass before they go public. So as a general rule of thumb, we would say anything above $500 million market cap kind of makes sense.
Yeah.
Because it's a lot of work, as we discussed.
They could have listed like 2 years ago.
Yeah, exactly. So these guys have no problem. Because size does matter, and liquidity will be a key feature when they make the IPO decision. So, if a company's smaller than that threshold, it may be an idea just to stay private a bit longer, grow the business out a bit more. And looking at it from the institutional investor perspective, a lot of these guys, unless you're unicorn size, they probably won't spend too much time on you. They have to justify their time to take this to an investment committee internally. So it makes sense for them, if the numbers are bigger, it makes more sense for them to have a look at it, unless it's a really exciting pre-revenue possibly story.
Well, let me ask you guys about what Brian mentioned, Kechuangbat, the I guess it's called Science and Technology and Innovation Board? Tech Board, okay, in China. Because, they've been visiting our companies, and I personally feel like we could have as many as 10 IPOs next year in China for our tech companies if, this board goes well. So, and I'm sure that, I know they're for sure pitching you guys, because you guys are on the priority list, I'm sure. So how do you guys think about that? Is that even, because we don't know what the liquidity is going to be like. So, is it something you would actually consider? And how do you guys feel about that? Is that a threat to you guys, or am I the only one excited about it?
I think, I'm sure you're getting all these visits and calls from both brokers and shareholders. Put you on the list. I will put you on the list. I don't know what that list is. Yes, it's a new phenomena. We're studying this carefully. There's not a lot of information that's certain out there. I think it's all about what's being heard, what's discussed in the room, with stocks changing, Shanghai, etc. So I would say we will have to wait for the new information to come out to understand what exactly it means. Clearly, it's a new initiative. It's very exciting because President Xi announced it, so it must, I think, being viewed as a top priority politically in China. And also, I think China needs a market to support innovation and tech companies. In the past, I think the Asia companies have more become traditional, and they look at profit and look at sort of a very stable business model, whereas our type of company would be different. So I think a new board will be important to make that happen. But I think there are things that company and our shareholders will look for to make sure they feel comfortable tapping it. For example, what is the rule of liquidity, exit, refinancing, how it's going to be priced, because we are different. We're not going to be a profit P multiple company anytime soon. So whether China has a system to value us properly, all that needs to be clarified before I think the companies plunge in. But I think it's a great development. I think it provides a new venue for us to look for liquidity and support. It's a domestic market. Some of the consumer brand benefit that we talked about will be there because it was a domestic listing. You are much closer to your end users and end customers. But on the other hand, we just don't know enough. Yeah,
there's uncertainty, right?
Yeah, absolutely. So we obviously will look at all possible exit options for our current investors, and that's just a fair thing to be considered. But as Brian said, there is really not a lot of information for now. Also, one thing that we like to consider is the diversification of investor. What type of investor do we really need, right? So we cannot say much about Kechuangbat at this point because really there's not a lot of details. But if you look at A shares in general, you look at the turnover in A share versus that of Hong Kong. Actually, the average turnover in A share, domestic market, is 3 to 4 times higher than Hong Kong market. So which means that investors, the amount of long-term investors in the domestic market at its current stage is, there is still room for improvement, let's just put it this way. So we want to, when we are ready to list, we want to make sure that there's a right balance of each type of investors in our portfolio. So we would definitely looking forward to more information on 科创板, and in the meantime, we will focus more on doing, making sure that our own business is developing very healthily so that when more regulations is ready, we are also ready to gauge it properly as well.
Any comments from you guys?
We're very encouraged that they are trying to launch this new tech board, especially directly from the central government. So I think that's a very strong sort of determination from the very top level. And from our point of view, of course, there will be challenges, and we actually have always welcomed challenges because it's always as long as we have a fair marketplace where everybody are equally treated. I think it's actually a good thing for all the market participants rather than trying to have sort of more close a place where only a few can participate. On the other hand, I think it's also complementary in terms of the role of Hong Kong Exchange versus Shanghai and Shenzhen. As you know, that we've already established a very strong connection with these two exchanges already, and I think going forward we could also see more and more companies who can get listed in the tech board can also come over to Hong Kong to do another listing, because always the companies will need an overseas exit option, right? And these are strong connections between the two will definitely promote our business going forward.
Okay. Well, look, I know you guys all think it's summer and everyone's really happy on this stage, but let's assume it's winter because IPO prices are down, right? A lot of and liquidity is probably going to drop next year, or probably go down. At least based on other people that I talked to. But let's just assume it's winter, okay? So what do you tell them what are the successful? Are there any successful winter IPO stories, or what are some examples of winter IPOs or public market fundraising that you've seen?
Okay, if I start, I mean the one that immediately comes to mind for us was NEO, which was done in September. So that listed with us, raised $1 billion, and that was hugely significant for us. It's obviously, flagship company story, it's flagship China story as well, and it was very well received. Significantly, it's still trading well above offer price. So it's been one of the, I guess, the few headline IPOs that's done very well in the public markets. The sector generally has obviously had some pretty tough times over the last few months, and there's not much as any of the exchanges can do about that. That's just the reality of what it is. But if there's an exciting growth story, valuation's a key point, by the way, going forward. Valuation expectations have to be realistic and in line with reality. So sometimes selling shareholders, not pointing at you. But
no, a lot of public market valuations are lower than private ones, right?
That's true. There have been some down rounds. So that's ultimately a decision the company and their selling shareholders have to come to some sort of agreement. So what's more important to them, to cash out at the maximum possible price but risk a poor aftermarket, or being a bit more realistic and taking a longer term view?
Yeah, I think just comment on the NEO IPO. It's obviously we're in the same sector, so I think it was really good to see it happen and done successfully. I think a couple takeaway for me is that first of all, you really need to have a sector that has a real exciting excitement behind it, because I think NEO in some way obviously sort of is a China proxy for Tesla. I think that's also a good way to make sure IPO done properly is having a very exciting story that you can compare it to. Secondly, I think you need to have a long-term investors that can keep supporting you, even in the event of IPO.
Sure.
I know that they've gotten very strong support from their pre-IPO investors.
Absolutely.
In IPO. So both, I think, are important to make IPO a success, even in a difficult market.
Well, the two examples I can give you, one is probably Innovent, as I mentioned before, because Innovent has done so well. It's actually the first biotech company that sort of came out of above the water after IPO in terms of the biotech before revenue. And I think one thing that's really important for Innovent is that it has certain scale compared with other biotech companies. And the second thing is that their investors in the, their pre-IPO investors are really long-term investors, and they value very much about the growth future of this company. Therefore, a lot of these investors from private rounds already also participated in the IPO process, which accounted for like 60% of the total investment during IPO. And the third thing is that I think it's very important that the companies are very realistic about who they choose to be their investors, and also the pricing strategy during the entire process. Therefore, we've seen a very successful secondary market performance. And the other thing, it's not this year's IPO, but I think it's very interesting about Wuxi Biologies, because if you look at them, they're, after they got delisted and came back to Hong Kong to get listed again, their share price and the market cap actually were 10 times than before, and their trading volume were also like 3 times more than before. So another story that why it is really important to get to get really close to a consumer base or the user base in terms of capital market assets. And the other thing, these are all biotech examples. And there are a few other examples that we know that recently Tongcheng Yilong got listed in Hong Kong, and they are actually the first what we call 小程序 listing in China, which is also a breakthrough. And the price performance was also very good. And the story behind it is that really how the issuers sort of position themselves, in terms of valuation during IPO. So it's like that you want to sort of realize the maximum valuation at the IPO, or you want to sort of, give some time for the company to prove itself over time, and until you get a really, good and fair valuation, eventually with a more stable, group of investors. I think that's something, the issuers really need to think about too.
Mm-hmm. Okay, we've got 2 minutes. Let's just take one quick question from the audience. Does anyone have one question? No questions from the audience. Why don't we just get one final comment from each of you about winter, summer, volatility? Are we still at summer?
Let me start first. So I think that market by nature in itself is cyclical. Okay, so we have almost 10 years of bull market in the U.S. This year we're starting to see a valuation come down. I think we're going to see a lot more actual earnings also will come down very soon, as we can see in some of the recent results. So contraction itself is part of a natural cycle of a healthy market. So I don't think that, especially for a proper industry or companies like us or like Xpeng, staying very short-term and looking at short-term market volatility is the way to go. Capital market is the way to help corporations to enhance their capital structure. So we should look at it in a very 平静心, okay, in a very calm manner in that sense.
Okay, quick thoughts.
We haven't talked about anything about the trade war at all. Yeah,
I was thinking if I should ask that, but I didn't.
Which amazes me. Look, if there's more clarity about that going forward, let's see how G20 turns out. A lot of the political noise that has caused this volatility may go away, or it could get worse. So, if there's more clarity there, things could get better.
Okay. 10 seconds from you.
Yeah, I think, obviously what we are going to be focused on is not all the markets. I think we're focused on our business. It's exciting. We're delivering our car to the consumer next month. We're going to start to build volume, next year, building a brand. So that's what we're going to be focused on. I think the volatility is out there, and we need to be, very carefully monitoring all the different, channels of financing. But at the end of the day, you need to have a robust business in order to stay above the water.
Okay. One sentence from Christina.
Okay, no matter it's winter or summer, I think none of us on the stage are actually very sensitive to all these climate changes. We are all here to be sort of ready for all the new issuers, all the investors, whether it's good time or bad time.